15 tips to protect your money from inflation. If you plan on keeping your money in the bank or saving it, you should be aware of how inflation affects savings. Here are 15 tips to protect your money from inflation. What is inflation? The term inflation refers to a rise in prices, which over time results in a loss of purchasing power. How to protect your money from inflation. You can safeguard your funds against inflation in a variety of ways, such as by making sensible investment decisions or preparing for an increase in inflation by purchasing assets that are inflation-resistant. How does inflation affect money? Money is impacted by inflation because it loses purchasing power. 15 tips to protect your money from inflation. 1. Gold. Gold and silver are two of the most popular inflation-proof asset types to invest in. 2. Commodities. Commodities are also a part of a diversified portfolio with long-term allocation. 3. 60/40 stock/bond portfolio. 60/40 is a well-known investment strategy that consists of 60% stocks and 40% bonds. 4. Real estate investment trusts, REITs. Real estate investment trusts are a type of security that owns real estate property investments. 5. S&P 500 ETF. An S&P 500 ETF is an inflation-protected strategy to invest in stocks, so that one can expect protection from inflation. 6. Real estate investment. Investing in a home to rent out is inflation-protected since inflation raises the cost of new construction and materials used by builders. 7. Leveraged loans. These are primarily utilized for commercial real estate investments, and the interest rates change based on inflation, making them preferable to a set rate of interest. 8. Treasury inflation-protected securities, tips. Treasury securities are an inflation-proof investment for people who prefer long-term inflation hedges over short-term ones. 9. Stocks. Stocks are inflation-proof because high inflation raises the price of goods, allowing businesses to charge higher prices for their products. 10. Cryptocurrency. Cryptocurrencies functions in the same way as stocks do. Inflation causes prices to rise, allowing enterprises to charge higher prices for their goods, indicating that people are prepared to pay. 11. Short-term bonds. Short-term inflation hedges, such as short-term bonds, will fluctuate in response to inflation, ensuring that investors do not lose money over time as a result of inflation eroding their savings. 12. High-yield bonds. These are inflation hedges that react to inflation in the same way that short-term bonds do. 13. International bonds. The bond market and overseas bonds will adjust in response to inflation, ensuring that your return on investment is not eroded over time. 14. Review debt balances. Secured debt, such as that on investment property, can be a good inflation hedge. 15. Equities. The issue is that they do not offer deflation protection. It implies that if everything else stays the same, you will lose money. Conclusion: investing in these assets will help you combat inflation and improve your financial situation. Kindly like and share. Thanks for watching.